Hi there, just read this disclaimer please. Alright guys, so I've decided that I'm going to start doing a monthly update. Something that just kind of summarises the portfolio, how it's done over the past month, what changes have happened, what dividends have been paid, etc. Right, so what I'm going to do is I'm going to actually take it from the last day of the month to the last day of the month. That requires me to use my unitisation spreadsheet and make sure that I do it on those dates. So for this first monthly summary, I haven't got that information. All I've got is my unitisation was valued on the 2nd of March to the 2nd of April. So just for this first time, I'm going to use those two dates. All of this is included in previous videos. So you can see on right at the end of February, I'll go back a bit further since it's the first time. Right at the end of February, I sold my Standard Life property income shares, and I used the proceeds from that to buy some Scottish mortgage and some Fundsmith, because I thought like these had fallen a bit more than these, and my long-term plan is always to sell the Standard Life property income shares anyway. Then lower down here we had a bit of a drop in the market, didn't we? So the 14 grand that I had in cash went into, I think 7 grand in total went into Scottish Mortgage and Fundsmith after a bit of a drop. We then had a further drop, didn't we? And I then put the last cash that I had, the last 7 grand, I think mostly went into Henderson International Income, and the remainder went into Polar Capital Biotechnology. Yeah, so the vast majority, over 6 grand of it went into Henderson International Income, and then the remainder went into my Momentum Ad Hoc fund, which is currently Polar Capital Biotechnology. And then we came to the end of March. So the end of March is the time where my kind of algorithm momentum strategy is like the time to sell and then go into the next one on the 1st of April. So as you can see here, I sold my M&G and my Polar Capital Global Insurance. So I sold those two. And then as you can see, I bought the next 2 funds. There was one other change. There was the second capital distribution from the Woodford Fund. So I got £1,338 from the Woodford Fund winding up process. In the end, I didn't end up reinvesting that. So as you can see here in my unitisation, my cash levels went up on the 26th of March. You know, if the market's plunged down further to even below when I put my last 7 grand in, maybe I'll put that in at some point, I don't know. But at the moment I'm quite comfortable just having a bit of cash on the side. Oh, and obviously the dividends that got paid, I mean there's 2 ways of looking at this. From the 2nd of March to the 2nd of April, I kind of officially paid myself the dividends from the previous month. So most of this 1,166 is from February's dividends that got paid, and then there was only a couple of dividends from March that got paid on the 2nd of April. But as you can see, here's the payments that I got paid in March. So March was a bit of a sparse month. You know, there's ups and downs over the years. You can see February was 1,277, January was 440, December was 431, and then I think November's a big jump up. Yeah, November's 1,890. So, you know, it's not a smooth distribution of dividends over the year. But I'm not going to start deciding my investments based on what time of the year the dividends get paid. That's what the cash buffer's for, you know. So in March there was only a couple of dividends, 318 quid, and then dividend announcements. So there was some dividend announcements. Lowland announced that their next dividend was to be paid on the 30th of April at 15p a share, and as you can see, 15p a share is just a continuation of the previous dividend level, 15p. So obviously there's no cuts so far with all of the coronavirus issues. So I assume they'll just be using their dividend reserves to keep the dividend high. Who knows, if the situation gets even, you know, if the dividends become catastrophically cut on the underlying portfolio, there may well be dividend cuts even in the investment trust, but so far they're continuing with the payment, so that's just on schedule. Murray International had right, so there was this announcement from Murray International that they've changed what the latest dividend was, because I think the latest dividend was due to be paid and was announced previously. It was due to be paid on the 20th of May 2020, but it hadn't been kind of voted on by the board. It's normally, I mean, they don't normally ever get rejected. It's normally just a kind of a procedural thing. But because they can't have an annual general meeting physically because of the coronavirus, they couldn't get that final dividend approved for the year. So what they've done is they've renamed it a interim dividend, which apparently doesn't need approval from the board. I might be getting some of the details wrong here, but the gist of it is, so they've just had to rename it so that it could just still get paid. So that's why it says, I think that's why it says 4th interim there, 15th of... See, I've got 20th of May in my spreadsheet. Okay, good job I've done this, really, isn't it? So it's obviously the 15th of May, as this confirms. So MYI is actually the 15th of May. I don't know whether that's just my mistake, or whether that's been changed since it was renamed an interim. Who knows? Doesn't matter, really. And Finsbury had a dividend announced. Well, actually, there's one thing I wanted to show here, is that, as you'll see later, Finsbury growth and income seems to be doing quite well compared to the rest of the market. And as you can see here, since mind you, they issue equity a lot, but you'll see here, since all of the turmoil in the markets, they had one transaction in shares where they bought back the shares. So obviously the net asset value was above the share price at that point. That's why they buy back shares. Not very often though, just twice. But then they've had a lot more issues of equity, which is normally a sign that the share price is higher than the net asset value. So by issuing shares, they're kind of making us money, really, by selling shares at a higher price than the net asset value they can, purchase their underlying portfolio at. It's just a sign that Finsbury's doing well compared to the rest of it. But as we can see here, on the 16th of March, they announced the next dividend. And actually, well, you can pause and read that if you like, but actually the next dividend has been kept flat. 8p to 8p. Normally, it would rise every time. But as you can see here, they've, in light of the current global uncertainty, they've just decided to go flat. They're just being precautious. Hopefully, I mean, probably not actually. It's probably wise to stay there, because I imagine they'll be dipping into their dividend reserves just like all the other investment trusts probably are, if they manage to keep the dividend flat or rising. I'd be delighted if they all kept them flat, to be honest. I don't need it to rise. Keeping it flat would do fine. And you had a dividend declaration from JP Morgan Global Emerging Markets Income, I think it is. So that'll just be paid on the 24th of April, and I think that is just flat. Yeah, same as last year, 1p paid on the 24th of April. And then obviously we had the big ones. Royal Bank of Scotland, here's the announcement of their dividend being scrapped or suspended. I don't know what phrase it was. So obviously both the banks, Royal Bank of Scotland and Barclays, have both had their dividend suspended. I mean, to be honest, I'm not that... Yeah, I mean, as you saw in that previous video about my worst case scenario planning, this was factored into that planning of my worst case scenario, that the banks would stop paying dividends. Now, how long it's going to be before they resume, who knows? I don't know. I'll just see what happens. So obviously my dividend income is now down by a fair bit. Alright, so there's the dividend and other announcements. Now let's look at the end-to-end, look at the month's performance. So, as we can see from the unitisation spreadsheet, what I've done here is from the 2nd and the 2nd, if we go there, I've gone from the 2nd of March to the 2nd of April, and my accumulation unit is down 18.29%, which isn't great, but you know, there's bound to be times like this. And I've just modified the chart just to show the 2nd of March to the 2nd of April it going down, but obviously I don't value the portfolio very often, do I? So there's just a lot of straight lines really. And then if we go here, what I've done is I've put this sheet together. But if we see here, I've plotted all of my, well, all that I could plot on this website from the 2nd of March to the 2nd of April for each month, and I've just found the total performance of each one and put it into my spreadsheet. And then I think I did it separately for the life. Oh no, at the beginning I did it on this sheet here. I did it for the Vanguard and the UK All Share as well. So I've just collated the information here just to show which ones of my portfolio are doing better than the others. So my whole portfolio went down by 18.29%. So I suppose that's kind of the weighted average of all of these performances for each one. And then obviously it also takes into account the portfolio moves that I made that I just talked through earlier on. So it takes all of that stuff into account, you know, like buying stuff with new cash, and it also has the cash performance of 1.19% rather than all these. So in this month, that cash performance of 1.19% in the savings account has actually helped this number probably do better than the weighted average of all these. But as you can see, here's just, so obviously my portfolio hasn't done as well as the World Tracker would have done. I've used Life Strategy 100 because it's possible I can plot that on the AIC's website, whereas something like VWRL, which is the World Tracker ETF, I couldn't get on this website. It's just a bit easier to find the numbers. But they should be pretty similar. Well, I don't know. I think there's more UK in this one than there is in the VWRL. Anyway, so obviously the one with 20, you know, as I've said in a previous video, the one with the higher level of bonds, so 20% bonds, done better than my portfolio, does better than the Life Strategy 100. And then the Vanguard UK All Share Index has done a little bit worse than my portfolio, so that's some well, it's not much, but it's some kind of encouragement. So what have we got here? Lowland's done pretty bad. BlackRock smaller companies, so it seems to be all the UK focused ones have done worse than the ones that have a bit of global exposure. I mean, they're all UK companies in City of London, but they're globally facing companies, most of them. And then obviously, it seems like everything that's been doing well for the past 10, 15 years just keeps doing well all the time. Fundsmith and Scottish Mortgage doing really well compared to the rest, and then Finsbury as well doing well compared to the average. So the main momentum seems to have kind of not done much different to the overall portfolio, but obviously at the moment the ad hoc momentum is in that biotechnology fund, so it kind of makes sense that that wouldn't be doing as bad as the rest of the portfolio, you know, because it's I don't know, I guess they think that some of those companies might get a vaccine, or and the FTSE 250 tracker seems to have done worse. HFL hasn't done too badly, but then you might think that the Far East stuff might have done badly even before this period, so before March, because, you know, it was in China before it was in the rest of the world, wasn't it, this virus? But that theory hasn't worked out for AAS, for Aberdeen Asia Focus. That's done a bit worse than the rest of the portfolio through it. But obviously GSK is not going to do too badly, similar to the biotechnology fund, really. And Shell, again, that hasn't done as badly, but I think if we look back at this, so what I'm thinking is, right, that's where the chart is starting. That's where my numbers are starting from. There is the 2nd of March 2020, and as you can see, the Shell share price had a pretty big dip before that. So it kind of flatters, by using these two dates, it might be flattering the Shell performance. And then obviously the two banks have done awful. You know, what do I expect? I've known for years that I should have sold these two banks, but I'm just so stubborn. I'll just keep holding forever. I've kind of given my thoughts as I've gone along, haven't I? So that's probably not the way to do it. Anyway, there's my first monthly update. Let me know if there's any monthly data or information you think I'm missing here that is vital. Can't think of anything. Oh, look, I didn't work it out for Woodford because it keeps distributing income. It distributed income, so the price goes down because of that. I don't know. It took me so long to collate all this info. I just got lazy. I couldn't be bothered getting that information. Anyway, until next time, have fun, guys. Bye bye.